Hello and a warm welcome to the CNBC Africa Special. I'm Kukuletu Cele. While European lenders Norfund, Rabobank and FMO have collaborated to form Arise, a $660 million African investment company. Joining me now to tell us more about this multi-million-dollar investment and where exactly it will touch and make an impact on the continent is Deepak Malik, who's the CEO designate of Arise. Thank you so much for your time today, Deepak.
Thank you.
Let's first get a perspective as well as analysis as to this partnership between these three financial institutions and why formulating Arise.
Well, each individually, if you look at all the three partners individually, have been investing in Africa for quite some time. I can talk a little bit more about Norfund. I work for Norfund currently. I'm the head of department for all the financial sector investing worldwide, but 70% of our investments are in Africa. And we are a risk capital provider. We invest risk capital. We are not a major debt player in the market. So we provide risk capital to financial institutions in Africa, in addition to other sectors which Norfund concentrates on. Energy is our biggest sector, but we're here to talk about the financial sector. So I'll just stick to that. So we've been taking minority stakes in local institutions across sub-Saharan Africa. And the primary purpose is to provide them long-term capital, right? And provide them good governance structures, value add. Main aim is financial inclusion. We are very strong on the development agenda, but we invest in profitable and sustainable businesses. So that's us. And then on the other side, we have Rabobank, which is a bank it's a cooperative bank formed in the 19th century. It's the largest bank in the Netherlands. It has worldwide operations. But Rabobank, being a cooperative, has a very strong development agenda. And it has also been taking minority stakes in Africa, in banks, to grow the financial sector. FMO is a Dutch development bank. It's been operating for over 45 years. It has a similar agenda. It has a similar direction. And sometime last year, due to various reasons, we wanted to grow our investments and we wanted to make a bigger impact. So did Rabobank, but Rabobank also faced some regulatory issues. As you know, you might have seen over the last 6 to 12 months, a number of foreign banks have made announcements about exiting Africa, and largely it's a lot got to do with regulatory reasons and risk reasons. And FMO also wanted to expand their footprint, so we decided that we would combine our resources, combine our assets, and create a much larger financial company which could offer economies of scale, a large capital base, and the key is to be long-term and sustainable. So that's the reason why we decided to form this partnership.
I'm glad you mentioned the long-term and the sustainability element, because so often when we see collaborative efforts like this, one tends to box it as a private equity structure. Is that the case?
Yeah, for us, we're very distinct from private equity, because at the end of the day, private equities do play a very important role, in economies. But in the financial sector, largely we believe that long-term capital is the key. We don't have, fixed investment horizons or exit periods. So we are in there for the long term, and we are not limited to our fund cycle or when LPs want us to exit. So for us, we can be there indefinitely if the need arises. It's not that we won't exit at any stage, but it's not bound by our any defined period. So.
Also, compiling research for this particular interview, I noticed that you're not necessarily excluding any other financial institutions from participating. There's a Portuguese bank which has shown interest in joining you later down the line.
Yes, it's a Portuguese bank called Montepio. They have two investments in Africa, one in Mozambique, where we are also a minority investor, and they have an investment in Angola. It's still not been finalized, so over the next few months we are in dialogue with them, so they could join in. But other than Montepio, the three investors currently have committed to a lock-in period that for the next 5 years they will not exit. So that also gives comfort to all our investees that you have a shareholder base which is strong, and all the three institutions are very highly rated in the world in terms of governance, in terms of financial strength. So that gives a lot of comfort to most of our investments because of today's headwinds in the financial sector. As you might have heard of, a lot of institutions are facing a lot of problems right across the continent, especially in banks. You would have heard about 3 banks closing in Kenya recently. So this adds comfort to all these institutions.
Let's get into the exciting part of the conversation, Deepak, which is naturally the name, Arise.
Yeah.
It says a lot about your investment outlook and the timing of your entry into investing on the African continent, because as you've mentioned, given the commodity price cycle, sluggish growth developments on the continent, everyone's a little bit shy now about the growth prospects and opportunities in Africa.
Yeah, you could call it optimism. For us, Arise is significant in the sense that it has a connotation of Africa rising. I mean, I do remember a few years back there was an article in The Economist about Africa rising, and then subsequently there have been lots of articles going the other way around. And we still believe in Africa, and we feel that a name like Arise gives lots of positive energy, and that's why we chose the name. So
let's talk about the investment strategy then, the $660 million. Naturally, there's a lot of questions as to where this capital will be allocated. We've seen countries that have exposure to oil as well as resources taking a significant knock. Is that going to be an area that might be prioritized perhaps?
Well, you see, $660 million is already there. That's already invested. So based on current valuations, which are fairly depressed, as you know, in the last 12 to 18 months, the current portfolios of the 3 partners, not counting Montepiu, value approximately $660 million. In addition to that, we have committed capital from all the 3 investors, which over the next few years would take the company to be $1 billion. So we would grow the company over the next 3 to 5 years to $1 billion in terms of investments. So $660 million is already there. It's already invested.
Goodness.
So it's not sitting there to find homes. So
as an African, I must say I'm impressed at the level of confidence that you've shown in the continent. But give us further details. Are there sectors which are ripe for investment? Because you've also traveled the continent quite extensively, or are you taking a more market-focused approach?
What we've done is that we've chosen all the, say, if you take our existing investments, they are a majority of them are in much larger local institutions, because our key is to try and build size and make sure that the banks then embrace inclusion, embrace technology, embrace good practices, create a very sound base for their existence with good financial strength. So all our investments, which all the 3 partners have chosen, to a large extent, cover all these particular areas. So our focus going forward, when we want to grow the company, we would still concentrate largely on the SME sector, strong emphasis on agriculture. Right, as you know, Rabobank comes with years of expertise in the agricultural sector, including rural development. We would also look at financial technology companies, because you can't, in today's world of virtual banks, lots of banks are moving away from bricks and mortars. So we would also look at investing in financial technology companies, which is a completely underserved market in Africa.
And is that picking up a lot more in the East, and in particular in Kenya, where we see all these amazing technologies and innovations being developed? Yeah,
if you, without kind of making comparisons, I would reckon that especially Kenya is in the forefront of technology. One of our investments, which as North Fund, we are the largest shareholder in Equity Bank. Equity Bank is a mass market bank in Kenya. In Kenya itself, I think it has now 9 million customers out of a bankable population of 20 million. And without criticizing any of their competition, but I believe that Equity Bank is 5 years ahead of other institutions in terms of technology and digitization. In Kenya, as you all know, has M-Pesa. Equity Bank has created their own platform called Equitel. So we hope that, especially with Arise, with all the synergies which we can take, that we can take technology to lots of other investments and the new investments going forward. So
Talk to us a bit more about agriculture. You mentioned that as one of the spaces too, and we know the stats. I mean, we're home to 60% of the world's most arable land. But again, we are struggling in that regard. But I know Rwanda is also one of those standout nations that's performed incredibly well there. Is that another area of opportunity?
Yeah, what we would like to do, obviously, everyone has the usual cliche about agriculture and says Africa is the breadbasket of the world, and why don't we produce?
But struggles to feed itself.
And I think that what we've started through, and especially with the help of Rabobank, and especially in Zambia and in Uganda and in Tanzania, where Rabobank has the three larger investments, they've started a number of programs in terms of agricultural value chains, using products, etc. So it's not necessarily primary agriculture, but it's also making sure that the value chains are there. And we hope that we can take that expertise to most of our other institutions. So we're a big believer in agriculture. I mean, Rabobank's motto has been to feed the world in 2050, and they strongly believe in it. So we hope we can make a success of it. So.
Let's move on to another sector very briefly, which I'm sure is a lot closer to your heart too, which is the energy space.
Yes.
And even though we are not seeing the best of examples regarding where we are in the cycle at the moment, but like everyone knows, it will turn at some stage. Is that perhaps another opportunity that's still being presented to this investment?
Yeah, well, indirectly as Norfund, Norfund's been one of the leading financial institutions which invest risk capital in the energy field, and all in clean energy. So we don't do anything outside of clean energy. That's a choice which Norfund's made. And Norfund has invested substantially in the continent, in hydropower, in wind, in solar, and in gas. We have a number of projects also in South Africa on the solar side. And we hope that with this new partnership Arise, our institutions which we invest in can also offer project finance locally on the energy sector to see the energy sector grow, because the majority of project finance currently comes from overseas, and we believe that we can offer lots more resources to this particular sector.
I'm glad you highlighted hydro as well, because we know the challenges that we've had given the changing weather patterns affecting some regions here in the SADC region. Does that also present some sleepless nights perhaps for you and some of your team members who invest in these models?
Because we're a long-term investor, we take the cycles. As you know, there's been a drought in southern Africa recently, so some of our investments, especially say in Zambia, where we invested in a hydropower project, is facing hydrology problems in terms of water, etc. But we will battle on.
Exactly, and staying in it for the long term. We're going to take a quick ad break, but when we return, we get further analysis and understanding of innovative financial models and how Arise will make an impact in the lives of many Africans in the long term. Welcome back to the CNBC Africa Special, where we're taking a look at Arise, a pooling of funds by some of the major banks in Europe and across the globe who are continuing their investment strategy on the African continent. We are still joined by Deepak Malik, who is the CEO designate of Arise. Deepak, just before the break, we were talking about investment opportunities in a variety of sectors. But again, as you say, being a long-term investor and starting this new initiative with Arise, there must be a lot of innovation with regard to how you now view how these financial models need to suit the African market overall when it comes to investment strategies. Give us your sense of the innovative methods that are coming up now when it comes to project finance, development finance, and even further.
Well, I think if I just come back to one of the key focus areas of Arise and even our existing investments is the SME sector. We strongly believe, all three partners strongly believe, that development has to be through the SME sector. You can look at models in Asia and other countries and see the growth of the SME sector. Within the SME sector, we would really hope that with digitization and technology, some of our institutions can be in the forefront, and that's what we will be concentrating a lot on over the next few years, is to make all our investments where we have minority interest. We have minority interest, so we don't control the management, but we can add value to the process. by helping them, in pointing them in the right direction, providing them resources, etc. So our main aim is to make sure that our institutions face the 21st century and take digitization as the trend currently in banking largely is to move away from bricks and mortars. As you can see, lots of people don't even know their branch manager. So things
which wasn't the case 20
years ago. And I think this needs to go down to the middle class and the lower middle class, which today still doesn't have the same access which maybe you and I have. So I think that's an important element which we'll be concentrating on.
Talk to us a little bit broader about that theme, because we have seen some governments really trying to encourage the role of SMME development as well as their participation in the economy. Are you finding much success when it comes to government programs that are in place and collaborating with them?
Well, our main aim, as I said, was to develop the private sector. So all our investments in the banking sector or the financial sector have been with private sector people. But we are not averse to partnerships with government, right, where we can help, in that process. Unfortunately, one of the key problems has been in terms of SME development is most banks are averse to lending to the SME sector. They consider it high risk. Very true. Very high risk. And some of the models like you have in NMB Bank in Tanzania or Equity Bank in Kenya have been largely successful, and they've proven that the smaller loans, the SME sectors, they're not the ones who default, to be honest with you, right? If you look at track records of non-performing loans, the major players are the rich people, who default. It's not the poor people who default largely. So I think it's very important that we try and break that cycle and try and put more money to the SME sector, and that's our whole intention here. So.
What about the argument that some might put forward that there's a lack of appetite to take on entrepreneurship as a first option of employment, if I can use that phrase, on the African continent versus what we see with our international peers in Silicon Valley and in markets in Asia broadly? Would you agree?
Yeah, I think to a large extent you're correct, and I think it's also more a risk-reward issue, right? People don't want to take that risk because some of the basic needs are not satisfied, right? I don't want to sound patronizing or anything, but I think the key really is that this can only come with sustained investment, and it will change in this continent. I mean, unlike Asia and the Silicon Valley, etc., where entrepreneurship is
a way of life,
and it was not a way of life in Asia till very recently, and you see more and more of it now. So we really hope that will also happen in Africa in the near future. So.
Let's certainly hope so, and with the additional support from the grouping and organization that you're trying to form, certainly this will change things and bolster things significantly. But naturally, because this is quite a huge initiative and broad-based across the continent, I understand you're in 20 countries so far and planning to expand further. Who's going to be on the ground making sure that these investments actually perform well?
Well, we have existing staff from our organization, NOFUN, and also some staff from Rabobank and FMO who want to join the new company. And our key really is that all our operations are entrenched in Africa. So all our operating offices will be in Africa. We currently operate out of South Africa, and we will continue to do so from here. And we will staff it with more people, and predominantly all our investment staff. We will have a separate value creation team which deals with value creation issues, the ones which we just discussed, and all of them will be based here. So we are entrenched in Africa, so we are not flying in and flying out. Of course, we will have a back office overseas to take care of compliance issues and treasury issues, but all our operating offices will be here in Africa.
It's also fair to say, though, that in some markets a skills exchange as well as a change of potential models that might have worked in other markets might also be a benefactor here. Talk to us about that engagement. Could we see even yourself, I know that you travel the continent quite extensively, observing examples that work on the rest of the continent that you can implement in Zambia, in South Africa, in Mozambique perhaps?
That's a key take from this investment, because if you see, we have our current investments are spread over 20 countries, right? And each country is different, as you know. A common theme is Africa, but within Africa, you also get differences even within East Africa.
True.
And within Southern Africa. And we hope to take all the synergies from each investment and see how we can benefit the other investment from those synergies and the points which we can learn from. So that's a big take from us. We also have a pool of very, very qualified people available within our organization and externally as advisors from our 3 shareholders who are available to help in any investment where they need particular help. So we are very excited about the value side of it, to see how we can, institute best practices right across our investment horizons.
Deepak, I'm going to ask you a very unfair question, but taking advantage of the fact that you've been monitoring the continent's progress for decades on end now in various sectors
of
the... Not that old indeed, you're not that old, but in different areas of the financial services fraternity. And you'd obviously travel the continent extensively, but paint a picture for us as to which particular markets on the African continent are getting it right, that despite the negative blows we might see and a slight decline in appetite for further investment here, which countries and markets are getting it right, actually?
Well, if you obviously, I spent most of my working life in Southern Africa, so I have a soft spot for Southern Africa. But to be honest with you, I'm pretty impressed with East Africa over the last 4 or 5 years, and especially what's happened in countries like Kenya and now what's happening in Tanzania and Uganda and Rwanda. So Eastern Africa has tremendous growth. Maybe they're coming from a lower base, right? But they've shown a lot of entrepreneurship, a lot of spirit to take things forward. Yes, of course, there are lots of headwinds in the financial markets, and they're affecting everyone, whether Southern Africa, Eastern Africa, and West Africa. You have commodity price issues, you have currency issues, you have liquidity issues. So these are difficult times. So to answer your question, I would reckon for me, East Africa has been a good growth story.
On another note, though, do you think that we often neglect the Francophone states?
Well, we don't want to neglect. So we are actually looking at potentially doing our first investment in Ghana, whether you call Ghana a Francophone state, but it is part of West Africa. And we hope over the next few years we would also expand into West Africa. We have some very small investments at the moment.
And I'm sure that's where the numbers speak for themselves, especially in the neighboring Nigeria.
Yeah, we would look at Nigeria, right? We don't have too much of knowledge at the moment, but we hope to go there in the near future. So.
And very briefly, as you said, a slight bias that we both have to South Africa, given that our lives are basically run here for most of the time. Many often say that South Africa does have a slight disconnect with the rest of the continent, given the matureness of its capital space. Would you agree? But at the same time, how do we need to use this as an advantage to continue stimulating further economic growth in the country?
Yeah, well, I don't think they have a disconnect. I think South Africa has a huge advantage. It has some really, really well-run financial institutions, which are world leaders, and they have gone out and opened operations in the rest of Africa. The only problem which comes is that because the institutions are so big in South Africa, we don't see them on a day-to-day basis as you see other institutions right across Africa. But I think South Africa does have a very strong role to play. They are innovators in a number of areas in the financial sector. They run very, very strong operating and governance systems. So I really hope that we can see the benefit right across the continent.
To come back to Arise for a moment, if we refer to the financial services sector on the continent in 10, 15 and even 20 years' time, how are you hoping that the picture might change and the impact that Arise would have made in that regard? Well,
our key is that we want financial inclusion, right? Africa has the lowest penetration rates in the world in terms of financial inclusion. We truly believe that development can take place accelerated by financial inclusion. You can look at Europe, you can look at Central and South America, you can look at Asia, and we hope that 10, 15, 20 years from now, Arise has played a big role in that. And we hope that it's a success.
Exactly. To close off with, though, as you said, 660 million already in the kitty, hoping to advance this to $1 billion in future, and various aspects that you're looking at in investing in. When do things officially kick off for Arise?
Well, we're going to go through a regulatory process now, because as you know, all these investments would need to be transferred, and the regulators play a big role in this approval process, and we hope to be fully operational by 1st of January 2017. So.
We look forward to the progress that's made once that does take place, and speaking to you again next year in 2017. Yeah. Thank you so much for your time again, Deepak. We wish you all the best in your endeavors. That was Deepak Malik, the Chief Executive of Arise, showing us again that we have even more reason to be optimists when it comes to investment opportunities on the African continent. We'll leave it there for today for the CNBC Africa Special. Thank you for joining us.